What is the most profitable strategy to trade hype stocks like GME and AMC? How would you feel if you found out a strategy with 80% win rate? Well, I'm not sure if it's for you, but I'm about to incorporate multiple strategies of my own and backtest 50 times to find the real probabilities. You will find these kinds of videos on my channel that I've just created. I will test out multiple strategies that I think of, as well as the ones gurus teach you on the internet, and show you the true results. The quality of this video is very poor as I was rushing to make this video as a tribute to AMC climbing over 100% today. But if you find this video helpful anyway, please drop a big thumbs up and subscribe to support the channel. In this video, I will backtest 50 times using the 200 EMA line and a well-known trading strategy called MACD crossover to help me enter the trade. As for exiting, I will use the 9 EMA line and a stop-loss under every support to maximize profits while minimizing losses. For those of you who are new to trading, the 200-day EMA is often used in trading to determine the general market trend in the long term. So if the stock price remains above the 200-day EMA, it is generally considered to be bullish. Note that this moving average also aids traders in identifying potential support or resistance areas. Similarly, 9-day EMA has the same function, but is most effective in the short term. As for the MACD crossover strategy, it simply means the stock is viewed as bullish when the blue line crosses over the orange line, or when the red histogram changes its color to green. I will not get into too much detail about these indicators, as you can find hundreds of videos on YouTube that have already done that. I'm using a 30 minutes time frame in this video, $25,000 as my starting capital, and most importantly, I will only trade when the stock is hyped up, not just when it is above 200 EMA. You will be able to tell when a stock is hyped up, such as when it is mentioned on the news, in groups like Wall Street Bets, or when it appears on StockTwits's trending section. Now, I will show you an example of a buy setup. Here is when GME was starting to get the attention, which is around mid-January. The market is currently above 200 EMA, therefore, it's an uptrend. Then we look for the MACD crossover, so we will have the buy setup entry here. In terms of my exiting plan, I will put a stop loss just under the nearest support, and will only be selling when the price hits that point, or when there's a full red candle under the 9 EMA. This means I may get stopped out right before a big move up, but I believe this is a good way to minimize losses from a fakeout, while maximizing profits with the 9 EMA after the exit. I will record the result in an automated spreadsheet that I've made. So without further ado, I will begin the 50 trades and stop along the way when there's something worth noticing. Stock begins to go in a downtrend here. Now, it is back to being in an uptrend, so we need to find the next MACD crossover. Note that around this time, GameStop's momentum has faded a lot, So you will likely see less gains and more losses. Now, I will do the exact same to AMC. Here's my final trade, which missed out on big gains, as AMC went from $28 straight to $70 without changing its MACD histogram's color. However, I'd say that's just a sign indicating that AMC needs to take a breather. After 52 trades, we have about a 52% win rate, and are up over 12,000% in return. We ended up with over $3 million in profits from the $25,000 buying power, thanks to compound interest. So, here's the conclusion and some things you should consider. This is definitely not a strategy with the highest win rate, and hype stocks with bullish momentum like AMC and GME don't appear on the market every day, so you won't be able to use this strategy that often. I was going all in trade after trade, which is undoubtedly risky. Hence, trading with millions of dollars would mean you're moving the market, unless you're trading stocks with hundreds of billions in market cap like Tesla or Apple. However, I would still use this strategy when something is extremely bullish. The win rate doesn't bother me, as this strategy focuses solely on maximizing profits while minimizing losses in a bull run. I was able to capture many trades that brought 50 to 200% in returns, while the most I've lost is only 17.69%. What do you think? Is this a practical strategy? What would you change to improve the winning ratio? Feel free to comment down below, or join our free Discord group to share your thoughts and ideas.